I'm going to show you how to possibly get up to $50,000 interest-free loan from Chase. Okay. Now, most people are not aware that Chase does not offer a regular personal loan. They want you to leverage their credit cards, right? However, there's a strategy that I'm going to share with you that you can possibly avoid a hard inquiry to get this type of loan, and you're paying it interest free on it. Now, the first thing that you need to do is sign up with either Melio or Plastic. Okay. And here's the difference. Here's a breakdown of the two in terms of like fees and all that stuff. So you can see in terms of who would give you the more benefits. Now, here's the thing about it that's so important. This is where it's going to be your biggest leveraging tool. So keep this in mind. Let's go over here to Chase. Now, the credit cards you want to get from Chase, okay, if you don't have a 524. Now, for those of you that may not be familiar with a 524, that means that you have five open revolving accounts, basically credit cards that you open within the past 24 months or 2 years. Okay. So if you have five accounts, it doesn't have to necessarily be with Chase, but if you have five open revolving accounts, then uh, you may not qualify for these credit cards. Now, there's a way to get around it because sometimes Chase may miscalculate your authorized user. You may have an authorized user on your credit file, and they may count that as a 524. So you would have to call a recon line to ask them to not calculate that authorized user. Or you may have a recent line of credit on there as well. So you have to make sure they do not count those against your 524. Okay, it's very important that you do that. All right. Now, put it in the comments why you think I chose these here credit cards. Okay, this is very important. Now, here's why. See these credit cards? These credit cards are designed for major purchases, okay? Larger purchases, all right? So the Amazon Prime, they're expecting you to spend a lot of money on Amazon, all right? The IHG, they're expecting you to do travel, a lot of traveling. Now, the IHG, the Marriott, either one of them. Then you have the United Gateway, okay? Traveling. So usually with traveling credit cards and large purchases credit card, they give you higher limits. All right. Now, the reason why I chose these three is because they do not charge an annual fee for these here credit cards. That's another thing. That's another benefit to you. So, what you want to do, you want to get approved for all three of these here cards or these credit cards that are similar that don't charge an annual fee. Then, once you get these here cards, what you want to do, you want to apply for this here card. Remember, I talked about the 524? This is the reason why. The reason you want this here slate card is because of this for 21 months on purchases. Okay? 21 months on purchases and balance transfers. Remember, I said about paying no interest? So you're going to remove all those balances on those three credit cards over to this credit card. Okay? Because it's giving you 21 months on balances and purchases. Okay? Remember, you're doing this to get out of debt. So once you've done that, then what you're going to do, you're going to use that balance on that credit card and you're going to apply for this loan. Okay. So this here is the credit card loan. So with this here credit card loan, Okay? It's no credit check. So they're not going to put in a credit check. The interest rates is lower, right? And then there's no fees. Now, some of you are like, well, why don't I just use that credit card? Well, the reason you can't use that credit card because with some of them, they may not let you pay off all of your other credit cards. So I'm showing you this way so you can actually get access to all the money. Okay. Now, here's the thing about it. With this here, they only allow you up to the maximum of what the limit is. Okay. So it's maximum 16,000. They allow you up to the maximum of it. Okay. Whatever the maximum is. All right. To take that loan out. Now, if they say, well, let's just say that you got $35,000 on the card. Okay. And let's just say they say, well, you can only take $16,000 off the card, right? But you need all the 35,000. So 16,000 going toward this loan. There's no hard pull on the credit, right? Okay, so you got that 16,000. Now you have 35,000. So that means you have what? $19,000 that you need. Remember I told you with this here signing up for Melio or plastic. Now, with that same credit card with a zero balance on it, okay, that's not charging you any interest on balance transfer. You can take that same credit card, put it on one of these platforms, and pay your other credit card bills with it. Now you're not paying any interest on that loan, okay? Because you got 0% interest on that credit card. So you're not paying any interest on that credit card, okay? You took the money and you used it on the loan. Have 19,000 in purchases at 0% for 21 months. Then the 16,000 that's in cash, okay, to leverage it. And so some people do this, like if they're trying to do some type of investments and stuff like that. Now, the question that, well, if you max out your credit card, uh does that drop your credit score? Yes, it does. However, one of the things about it, as you start paying it back, your credit score gonna go back up. All right. But at the same time, you have access to the full 35,000 because people don't know how to liquidate the credit card. They get the credit card, but they don't know how to liquidate it. So I'm showing you the strategy of how to liquidate it to be able to get all of the money and leverage it. And you're not paying the interest on the money, okay, for up to 21 months. That's the reason why you want to do it in this step. So if you have any questions on how to do this, how to get approved for Chase, by the way, with Chase, if you're brand new, they may do two hard pulls. One on your experience, one on your TransUnion. So I would tell you, you definitely want to prep your file. Okay. So here's the thing about it. When prepping your file, you do not want to have a lot of subprime accounts on there. Like if you have credit builders like Kovo, Kickoff, okay? Austin Capital, which is Credit Strong. When you have those on your credit file, they will count that against you, okay? And they will make you have lower limits. If you want to prep your file and you're rebuilding up, then you want to do it with like secured cards and secured loans from um, your credit unions or your banks. Those will have better weight than those credit builders. All right. So I hope this video helps you. If you have any questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.